package them in the U.S. So they maybe can say, you know, iPhone designed in California, assembled in China, packaged in the U.S.
Oh my
maybe
gosh.
that'll do something.
Maybe.
And I just came up with that on the spot, so I'm sure Apple will come up with something better and have more than 30 seconds.
We love when you come up with stuff on the spot. Mark Gurman, have a good weekend. Bloomberg News Managing Editor for Global Consumer Tech. Check on the trade when we come back.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we've got just about a little over an hour to go until we wrap up the trading day and the trading week. Amid all the volatility, like, let's not forget, we had quite a rally on Wednesday, which when I was kind of reading the headline that stocks are eyeing their best week since 2023, I was like, well, how did that happen? And
then I said, remember what happened on Wednesday?
I didn't. It's just been that crazy.
It feels like a month ago.
It does. This whole week feels like a month. Let's take a look at some stocks on the move this week. With us is Bloomberg News Managing Editor for Markets Live. Joining us is Christine Aquino. Christine, what do you got?
Well, Carol, I'm looking at JP Morgan, still top of the stack in terms of the banks that reported today. That's up more than 4% in the afternoon session. And investors really liking that record stock trading revenue. 48% increase to $3.81 billion. That volatility in markets that we're seeing really paying off for JP Morgan. Net interest income also $23.3 billion. That's a 1% increase. So investors really loving that. But of course, we also saw CEO Jamie Dimon warning of considerable turbulence coming in markets, and looks like they're preparing for that as well with the money that they set aside for sovereign loans. That has also increased way more than analysts had predicted, $973 million set aside for that.
Space, because we got some news out of China today that really moved U.S. stocks.
Yeah, absolutely, Tim. I mean, we got some clarity from a Chinese semiconductor body, and they're emphasizing that the government will put tariffs on chips based on where they're manufactured rather than where they're shipped from. And so this is very relevant for any companies in the US that are importing these chips. Texas Instruments is one of them, and we're seeing that stock down in the session. It's actually the biggest laggard on the S&P 500 today, down more than 4%, because I think that stance just really makes it clear that whatever the cost of importing these chips now, that's going to go a lot higher.
When you have a fabricator like TSM making most of the chips, right? Like
Can
everything.
you just move that thing to Arizona,
Yeah,
Carol?
Hey TSM, just
just-
pick it up, boom, cross the ocean.
Just take those machines and...
Tain't so easy,
No.
Mr. Stenivek. No,
It's not. I've driven... So years ago, I've told you this, I drove, I think, 2022,
Yeah.
driving in Arizona outside of Phoenix and seeing some of these facilities that were being built. And that was several years ago.
But it's tricky.
Very,
it's tricky. And this is a big
extremely
deal.
tricky.
And this is why you see it playing out here. So glad you're looking at Newmont. It was one of the names that I talked about yesterday and have chosen as a gainer because we've seen gold just take off.
Yeah, absolutely.
Record
Carol.
after record, it feels
Yeah,
like.
yeah, exactly. I mean, we're seeing that pay off for this gold miner, UBS upgrading that company from neutral to buy now. And UBS also upgrading its gold forecast to $3,500 in 2026. I mean, remember, we hit a record just over 3,200 earlier today. Gold really has been one of the most reliable havens in this sort of turmoil. I mean, a lot of the other havens that we've traditionally looked at, the treasuries, the US dollar, all seem to be breaking down, but gold still going strong. It's up 23% this year.
I'm looking at the chart right now. It's remarkable to see this. I mean, it seems like every day, Carol, we're talking about a new record for gold.
Yeah, I mean, I kind of get it because, right, in terms of safe havens, right, and that is another one of the ultimate safe havens, and we've seen gold on a tear this year. When you were thinking about stocks on the move, before we wrap up, there was a lot to choose from.
Oh, yeah. A lot to choose from.
It's a different tone, right, today?
Yeah, exactly. And, you know, I think we got some late-breaking news in the afternoon from several Federal Reserve officials. We did get some comments via the Financial Times from Susan Collins saying that the Fed is ready to step in. I mean, that's their default stance anyway, but I suppose...
Not that they're ready to. It's just like, this is what we do.
Exactly.
Yeah, and to be fair, she did say that markets are continuing to function well and that
Yeah.
we're not seeing liquidity concerns overall.
Exactly. But you can just tell from the market sentiment, right? The reaction to that really helping those gains in the afternoon. It's just something that markets probably are wanting to hear at this particular point in time.
Yeah, super interesting that we are holding on to gains. We'll see what happens in the last hour of trading, whether or not that holds. Christine, so appreciate it. Bloomberg News Managing Editor for Markets. Live, Christine Aquino. For more conversations, hey folks, check out our new Stock Movers podcast. It's 5-minute episodes on the biggest winners and losers in the stock market at any given time. Listen to Stock Movers. You can find it at Apple, Spotify, or anywhere you get your podcasts.
One thing I wanted to talk to you about very briefly, Carol,
Yes.
was just a little how the sausage is made inside baseball. Call it what you will. The way that late yesterday, our show for today and what we had planned kind of fell apart a little bit.
Totally blew up. And what's interesting is, folks, we were going to have two CEOs on. One from a really iconic brand that you would know. They've been around for a long time, seen a lot of market cycles. Another one, big market cap, I think it was about $45 billion market cap, plays into the industrial space. Both of them pulled their plans to join us. And I think it speaks to what Jamie Dimon said, the corporate environment, people, I think, and certainly CEOs, a lot of uncertainty out there. And it's really hard to talk about this environment. And certainly they probably expected we're going to say, hey, what's the outlook? And it's hard for them to really pin that down. And that's something that Jamie Dimon said, essentially watch on those earnings calls. You're going to have a hard time, CEOs getting there.
There's a great story on the Bloomberg terminal by a trio of folks. It's tariff chaos creates an information vacuum in the stock market, and it includes information about all the companies that have just so far really revised what they're saying to investors for the remainder of the year because they don't know, because there is so much uncertainty.
Exactly. Very, very difficult. For those on TV, the close coming your way. Tim and I continuing right here on Bloomberg Business Week Daily.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The financial markets are feeling more confident today despite the escalation in the trade war between China and the U.S. Beijing announced it's raising tariffs on U.S. goods to 125%. Correspondent Anna Corin in Beijing.
It comes as President Xi made his first public comments on the escalating trade war, saying his nation is not afraid. He said, quote, "There are no winners in a trade war, and going against the world will only lead to self-isolation."
White House Press Secretary Caroline Leavitt.
The president made it very clear when the United States is punched, he will punch back harder, and he hopes to make a deal that benefits the American worker and our companies that have been ripped off for far too long.
But CBS's Weijia Jiang reports there's been no direct response from President Trump yet.
President Trump wants to negotiate this deal directly with Chinese President Xi Jinping. He doesn't want anyone under him to be doing the legwork, which usually is what happens.
The president's envoy Steve Witkoff is in Russia for talks on Ukraine. Our Charlie Daggett reports from the Pentagon. President Trump is growing impatient for a deal.
This doesn't look like they were gaining ground towards at least a temporary 30-day ceasefire. Putin kind of moved the goalposts. He made further demands. He's demanding the loosening of U.S. sanctions. At the same time, Russians have we've been watching it, been bombarding Ukraine up and down the front line.
Trump wrote on his Truth Social today, Russia has to get moving. Witkoff will later travel to Oman for talks this weekend with Iran. The administration continues to insist those will be direct talks. There was a hearing today in Maryland where lawyers for the Trump administration were supposed to provide information on the status of a man wrongly deported to El Salvador. They argued they didn't have enough time. The attorney for Kilmar Abrego Garcia.
And the district judge appropriately was not willing to accept their vague and unsubstantiated assertions that, don't worry, Judge, we'll take care of this all in due course.
CBS's Katrina Kaufman was following developments.
Why does this government lawyer not know anything about where Mr. Abrego Garcia is, or why can he not share that information with the court, which is why she's requiring that she said even if it's just a little bit of insight or even if the daily report is zero, she needs it on the record each day what efforts they're making for Mr. Abrego Garcia's return, where he is, whose custody he's in.
Checking the numbers on Wall Street at this hour, the Dow Jones Industrials are up 528 points. This is CBS News. An Iowa man has been arrested for allegedly stealing some valuable Pokemon cards. Michael Wallace has the story.
Police say Alex McClellan broke into a collectible shop in Perry and swiped up to $40,000 worth of cards. Store supervisor Justin Estes alerted other local shops.
We pretty much wrote everything off. We thought it was gone.
Police say 3 days later, McClellan tried to sell some of the cards at a shop in Des Moines, where manager Raven Voorhees grew suspicious.
It was just some specific cards, and we were really just keeping an eye out for the value.
McClellan is being held on burglary charges. Michael Wallace, CBS News.
Researchers think they've pinpointed why cancer patients experience fatigue and a lack of motivation near the end of their lives. They say there's a direct link between inflammation and a loss of motivation. Inflammation can suppress a chemical in the brain, and that results in apathy. They hope their findings will improve the quality of life in late-stage cancer patients. I'm Cammie McCormick, CBS News.
This
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just under 55 minutes away until we wrap up the trade on this Friday, and certainly for the week overall. We've got a little bit of a rally on the equity side of things, holding on to gains and more than 1%, about 1.5% on each of those major equity averages. We've talked a lot about the Treasury market, though, in the last hour, and rightfully so. We've got yields up on a day when we got a UMISH sentiment report that was pretty negative, and so we continue to watch the Treasury market. The Treasury market's had an interesting week as well.
Oh, it has. Going back to the equity market and the week on the equity market, Carol, look, we do have an hour to go, or 54 minutes until the close, but we're on track to have the best week since 2023. The S&P 500 this week up more than 5.4%. We're going to have much more from Charlie Pellet in just a second. In the meantime, though, once again, we're all in on trade, tariffs, and markets for the next 2 hours from pretty much every angle. No, there's nothing else. No, there's a champagne story that we're going to get to. But yeah,
this is
there's a tariff angle.
We're going to get to it in just a moment. All right, let's get to Charlie with an update on the trade. Hey, Charlie Pellet.
Well, hello there, and here's what's going on. 54 minutes until that closing bell. Clang, clang, clangs on Wall Street. The Dow, the S&P, NASDAQ solidly in the green right now, on track for a winning week. Let's begin there. For the week, the S&P is looking at an advance of 5.5%, but right now the S&P is up 90 to 53.59 on the S&P, and a gain right now of 1.7%. We are holding close to session highs, no late day swoon. Right now the Dow is up 637, up 1.6%, and NASDAQ up 306 for the NASDAQ Composite Index. That is a gain of 1.9%. NASDAQ 100 Index up 1.8%. Russell 2000 up by 1.3%. The 10-year 4.48% with a 2-year 3.94%. Spot gold up 1.7%. 32.31, trading at a record up $55 an ounce. West Texas Intermediate crude 61.68 a barrel, up 2.7%, and Bitcoin now up by almost 5%, 83,798 on Bitcoin. Bottom line, an update: Savita Subramanian is head of U.S. equity and quantitative strategy of BofA Securities, and on surveillance this morning, she told us there are reasons to be optimistic about stocks.
I think there is actually potentially more upside than downside risk to the S&P 500. And I know I sound a little bit, out of sync with everybody else here. But, again, I see this as a market environment where you want to follow the money. The money is not going into U.S. Treasury bonds. There's a buyer's strike on U.S. Treasury bonds. Where is the money going to go? I think it's going to go into inflation-protected income.
Savita Subramanian of Bank of America on Bloomberg surveillance. Briefly after earnings, J.P. Morgan shares up 4.6%. Wells Fargo after earnings now down 1%. Morgan Stanley up 2.1%. BlackRock after this morning's report up by 2.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Worth repeating some of what we just heard from Charlie because of this rally that we're seeing. Solidly in the green, the S&P 500 up 1.8% right now. Stocks wiping out losses to extend their best weekly rally going back to 2023. What a difference a couple of days makes. It's been a chaotic few days. They really underscored fears of foreign investors are beating a retreat from American assets. This is after we saw a sell-off in longer-term treasuries and the dollar abated. One person we've been going to regularly for his wealth of experience is our own Ed Harrison. He's Bloomberg News senior editor and author of the Everything Risk newsletter. Early in his career, he was a diplomat at the U.S. State Department. He's kind of done everything, which is one of the reasons we like to talk to him. He joins us from Washington, D.C. Rumor has it, Ed, you also speak like half a dozen languages. True or false?
That is true, actually, yes.
Okay.
Is that from the diplomatic work?
No, he can't comment, okay? I'm not going to make him comment on that. It's for a different time. Look, I did want to get you on, and we all wanted to have you on the program today because what a week it's been. Stocks certainly one thing, but the Treasury market is sending a couple different signals. I'm wondering what you're seeing when it comes to the Treasury trade.
Yeah, Tim, there are three signals I saw sending, and luckily we're ending the week with a pretty straightforward signal. The one signal was that we were going into a recession, and that was when treasuries were rallying across the curve. Then there was a second signal, which I think was the most ominous, and we saw that at its worst today with the yield curve steepening and the long end really selling off. That was that people were doing this sell America trade. The final place where we've landed just as the week is closing is that the Fed is not going to cut except in the most dire of circumstances. That means that the swaps market is pricing out cuts. We have 3 cuts through the end of this year, down from 4 or even 4.5 earlier in the week. And we can see that with the 2-year actually underperforming the 10-year or the 30-year. That's where we've landed at the end of the day, is stagflation as what the bond market is telling us.
Yeah, it makes me, right. It's just, I gotta say, Ed, like to see this move and then see what's going on in the equity markets, like none of it makes sense to me.
Yeah, I mean, we're all looking around for a place to. Well, I thought it was interesting that Savita Subramanian was talking about equities, places that you can hide out that were inflation protected. We're all looking for that inflation protection. It does seem that now, you know, we've gotten through a lot of this. That the core message is that stagflation is going to be the price that we pay for these tariffs. And then the question becomes, you know, how much of a price do we pay? But at a minimum, we're going into a much more stagflationary environment than we left.
Roll on top of this, I'm just looking at the dollar index. It's down about 3% this week. And I think I heard on this with the surveillance gang on radio earlier this morning, either one of the guests saying that basically every currency was up except for the dollar. You know, we are continuing to talk about whether or not, you know, how much investors, global investors might be pulling back on anything to do with dollar-denominated assets. And that would be such a switch. Have we, though, been seeing a little bit of that over the last few years? I mean, certainly China has looked to maybe do some diversification, but I'm just curious how we put kind of what we're seeing today in context of over the last few years.
Yeah, I think that, you know, this whole concept of American exceptionalism was very much a driver of assets flowing into stocks over the last few years. And what's taken on water there, when you think of like 3 different things, there's the fact that, you know, American markets are large and deep. There's also the concept that the rule of law is very much in effect, more so than in many other countries. And then finally, the concept that there's more growth, especially when you look at tech stocks. Those last 2 have taken on water. And that's, I think, where we see the difference between where we were before January the 20th and now. And I think the big key factor here is tariffs. Not only that they're large, much larger than a lot of people thought they were going to be, including Larry Fink, but they are, you know, it's been off and on that you know, no one knows what's actually going to happen. There's a sense that we have to wait until everything calms down before we know what the new regime is actually going to be.
Well, and I guess what I want to ask too is it feels like the market, the equity market today is trading one way. When I saw those UMISH, I thought, oh my God, yields are going to drop, right? So I feel like the equity market today, at least, is telling one story, and the Treasury trade is telling a different story. Is that right?
You know, I go back to what Savita Subramanian was saying, and I think that she may be onto something. You know, 2 things are, one, that this sell American trade has sort of stopped itself out. You know, we were oversold on that trade. People are starting to come back in. And remember, this is like 1 hour before we're about to close for the week. Right. So it's very positive that we're seeing that. But they're saying the same thing in the sense that stocks are up, particularly in places that are more recession resistant, more inflation resistant. And perhaps that's going to be a theme that last for some time until we have another change in the tariff regime that we're running with.
Well, in your view, Ed, is there going to be a change in the tariff regime? Does it seem like markets have priced in, okay, these baseline 10% tariffs across the board, that's going to stay, and all we're waiting for is what ends up happening with China?
Yeah, I think what ends up happening with China will be the big key. I take a much more bearish view probably in general, because I think that recession is a more likely outcome, just as the bond market is saying 3 cuts, which you're only going to get in sort of a more severe downturn. But I think that China is not going to back down. Donald Trump thinks that he has all the cards. He doesn't have all the cards. China has many cards to play as well. And ultimately, this is going to be a tete-a-tete that they're not going to back down from. And it's going to be ugly. And as a result of that, we're going to see high inflation and low growth and potentially a recession. And that's going to be the regime that I think stocks and bonds will trade for.
Like, how ugly, though? I mean, in your view, you see this tit for tat as it stands right now, lasting months or years?
I think that, number one, we're not going to get a bilateral Xi-Trump conference until Trump shows that he's willing to relent in some degree. Because, yeah, I think Bloomberg Intelligence did a great job in terms of talking about this. They've seen how they act. They're playing the long game, the Chinese, and ultimately they don't want to lose face either. They have their domestic constituency to deal with, and Xi is not going to give concessions, and he's not even going to have a bilateral talk with Trump until he knows that Trump is serious about specific preconditions. So we're going to have to go through, lower level people coming up with something that they can then ratify together and present, okay, we've ratcheted this down.
Ed, just real quickly, otherwise I'm going to get yelled at by my producer. 25 seconds. 10-year note, is it more likely a 5% or back down to 4%? What are you hearing, just quickly?
I think it's going to go closer to 5% before it goes to 4%. That is that stagflation means that that's the path of least resistance until we get the negatives in terms of growth.
Got it. Got it. You were quick. Thank you so much. Ed Harrison, Bloomberg News Senior Editor. Thanks for all your time that you gave us this week. He's author of the Everything Risk newsletter. Coming up next, Rare Earths, China, and the U.S. What's at stake? We've got a roundtable you will not want to miss. This is Bloomberg Business Week Daily.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go until we wrap up another wild and chaotic and, yes, historic week. The Dow, the S&P, NASDAQ all advancing right now. We've got the S&P higher by 97 points. That is a gain of 1.9%. The Dow now higher by 649 points, up 1.6%. NASDAQ up by 2%. The NASDAQ 100 index up 1.9%. And the Russell 2000 index up by 1.4%. The S&P 500 index, by the way, on track for a weekly gain right now of 5.8%. The 10-year currently yielding 4.47% with a 2-year 3.94%. Gold is up $53 the ounce to $32.29, looking at a record up 1.7%. West Texas Intermediate crude up 2.8%, $61.72 a barrel. And Bitcoin now up by 5%, 83,855. So indeed a wild week with the volatility seen continuing next week, according to Cameron Dawson, Chief Investment Officer at New Edge Wealth, who was interviewed on Surveillance. And during that conversation, she invoked Greek mythology.
If this was Icarus flying close to the sun, the wax certainly started to melt on the wings on Tuesday night when we saw the bond market gap out and yields really spike higher. Now it's spreading into FX markets, which just suggests to us that liquidity is leaving this market, and we cannot rule out that these big moves continue.
Cameron Dawson of New Edge Wealth interviewed this morning on Bloomberg Surveillance. We're keeping an eye on U.S.-based chip companies. Shares today of both Texas Instruments and Intel, they are both lower. Beijing is going to be raising tariffs on all U.S. goods from 84% to 125%, leading the China Semiconductor Industry Association to issue an emergency notice. Texas Instruments right now down 4.6%, Intel down 1.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that, Charlie. Do appreciate it. Well, Chinese exports of rare earth minerals are all put on hold as producers grapple with tighter permit requirements following last week's new restrictions on the critical materials in an escalating trade war with the U.S. We want to go deep on rare earths to understand how they fit into the trade war, if there are alternatives, how much leverage it gives China, and more. And we've got a great roundtable.
So we're going to just tell you, sit down, pull your car over, maybe grab a drink. Well, not if you're in the car.
Get your shovel and dig in.
Well, because this is going to be,
you're going to learn mining reference.
You're going to learn some stuff.
Gracelyn Baskarin is director of the Critical Minerals Security Program at the Center for Strategic and International Studies. And a name familiar to our audience, Bloomberg News metals and mining reporter Joe Doe. Gracelyn joins us from New York. Joe is here in our Bloomberg Interactive Brokers studio. Joe, rare earths on the surface sounds like they're rare. But I'm learning that they're not actually that rare.
Right. They're not rare.
They come from the earth, though.
They come from the earth.
That part is true.
It's hard to find them in density, right? So the rare earths are like literally in your backyard. You just like dug up some dirt. You could be like, oh, there are rare earths in this. But you know,
we live in New York.
Right, but it's the same as like, oh, well, I take zinc as, you know, a vitamin or whatever, you know, whatever it might be, right? It's but in terms of industrial scale, right? Because you need rare earths to create things like permanent magnets, and permanent magnets allow for wind turbines to keep moving and for electric motors to keep moving. I mean, that's really all like the main thing regular people should know. To find the density is quite difficult. It's not like they're just in your backyard.
Mm-hmm. Like a huge pile. Gracelyn, come on in. Your background's pretty incredible. A mining economist, critical minerals and trade. You began your career in South Africa's Platinum Belt, spent 5 years at the World Bank in South Africa. So tell us a little bit about, like, what don't we really know about rare earth minerals? And then we want to kind of roll into this, how the U.S.-China trade war plays into all of this. But come on in and welcome, welcome.
Thanks so much for having me. So, you know, as Joe said, rare earths aren't rare. They're everywhere. But why we're really vulnerable for them is that once you dig them out of the ground, you have to separate them. And those separation facilities are primarily in China. So for heavy rare earths, they actually separate over 90% of the world's heavy rare earths and about 80% of light rare earths. Now, the problem is that means once they go to China, China can apply any sort of export restriction to them. And they actually started doing this about 15 years ago when China first cut off Japan from rare earth exports because they got into an argument about a fishing trawler. So we have seen minerals and even rare earths at the very beginning be weaponized over time. For us, it's a national security challenge because rare earths go into almost every form of defense technology, from fighter jets and warships to missiles and tanks.
Graceland, can we build the facilities here in the U.S. that could process those rare earths so then the United States gains control over some of the share?
Absolutely, and we are building them. The problem is that none of these facilities come online overnight. So over the last 5 years, the Department of Defense, through something called the Defense Production Act, has given out over $300 million to build these facilities in Texas and Canada. And for some rare earths, it'll be the first major facility outside of China.
Canada, that maybe 5 years ago that worked. We're not going to talk about that right now, but that made my ears perk up because of what's going on between the U.S. and Canada right now.
But can we produce enough, and Joe, come on back in here, enough in terms of to meet the demand that we need here in the U.S. for things?
Not right now.
Yeah.
I mean, this is, what Graceland's getting at here is very similar to the story of steel and copper and like all these other things, anything manufacturing, right? Like this is the approach of the Trump administration is bring all manufacturing back to the United States of America. To maybe take a phrase from our president, sounds great, doesn't work, right? Like you can do it, but as Graceland says, it's going to take you a while. I mean, MP Materials is like the big critical minerals company in the United States.
Yeah.
And they're still shipping a significant amount of their rare earth pulled out of the ground to China to be processed. Yes, they're currently working on integrating everything and having their own processing, but you talk to anybody in the market and they're like, that even when they get fully scaled up to what they say they want to do, it's just not enough on their own.
Graceland, so it sounds like China has a great weapon in this trade war to get the U.S. to maybe bend a little bit. Is that fair?
Absolutely. So let's talk about the export restrictions that just came out this week. So they're not actually a ban. If you think about restrictions, you start with something that we call non-automatic licensing, which means you have to apply to get a permit to be able to export the minerals. Then you have tariffs, you have quotas, those are your mid-tier, and then you have a ban. What China did this week was the lightest form of restriction, for lack of a better word, is they put in the non-automatic licensing. But if the trade war continues to accelerate, they can continue to tighten those restrictions. And ultimately, because there are so few facilities that can give us the rare earths that we need outside of China, that's going to undermine our national security. It's in things like semiconductors, so it's going to affect our economic security, and it's going to affect our energy security, given that they are in many forms of energy technologies.
So is your read on what China did by taking the easiest measure or the least punitive measure a strong diplomatic sign to the U.S. that we're open to negotiating?
I think it's a sign to both China and the U.S. Like, ultimately, these companies are all Chinese, and cutting off exports altogether would be economically consequential to them. So it's a sign there that, look, that there is room that, like, we need to get ready. We need to buffer, be ready for potential changes. But it is also a sign to the U.S. that they didn't go all the way to the very end and ban exports immediately.
Joe, how long, in your view, do you think the U.S. will have to rely on China for processing?
Forever?
A long time. I mean,
we're talking one hand counting, or
not anywhere in the near term. And to jump off what Graceland just said, they didn't put an export ban or an export control on everything. Like the two most common rare earths are untouched by this, right? So the way I've heard this described from Graceland and from other people in the rare earth space, right, the critical mineral space, is like Chinese policymakers are incredibly sharp. They know the score. They know what impacts what. And when this came out, this export control came out on Friday morning, initially people in the market were saying, oh, whoa, okay, they're going to restrict these, 7 or so rare earth critical minerals. But then what they started realizing was, oh my gosh, this includes like actual magnets. This also includes actual products that are shipped to the United States. And that's when, especially in the defense community, people were calling up and saying, whoa, hold on, this is an interesting shot across the bow. Because you might remember, gallium and germanium had export controls put on back in the fall. And that was like a follow-up to prior year where China had said they were looking at it.
Right.
I mean, we had reporting a year ago that said when the gallium germanium shot came from China, that was the panic button that went off across the DOE, the DOD, and all the other departments. So we had one very high senior White House official who told us that was the moment when everybody finally got it and understood how serious this was.
And that was under the Biden administration?
Biden administration. So this isn't new, right? Like China,
it isn't.
My point of they know the score, which is they'll roll out something here, they'll roll out something there, and it's a warning sign, right? It's like, hey, we're doing this, and we're making the people that matter most realize it first.
Graceland, contextualize this for us, because in the negotiations between the U.S. and China, which do not exist right now, but will ostensibly have to exist when it comes to resolving this trade war, that's the whole idea here. How important is the card of rare earths?
Rare earths will be important. Minerals will be important. If we take a step back, and what Joe has said is how this has escalated even from the previous administration of germanium, gallium, antimony was banned in the fall. We saw tungsten came at the start of this year. Is that we are actually vulnerable. We kind of sometimes throw all minerals into rare earths or rare earths into minerals. But when I go beyond rare earths, we're getting increasing restrictions coming out. And all of these commodities that we're being hit by are ones that we often don't have alternate supply of, but we may have limited stockpiles of, and that we need for our fundamental security. So expect to see minerals, I think, feature very strongly in the conversation, including rare earths, because of the fact that we are dependent on China for close to 24 critical minerals.
All right. So final thoughts here. Just got about a minute and a half here left. So Joe, I don't know. I guess to watch the negotiations between U.S. and China, right, and what they say specifically in this area, this is a really, really important sign in terms of what's happening.
Yeah, we've all focused on tariffs for the past week.
Right.
And for the past 2 or 3 days, we've really focused on the China tariffs because everything else apparently is on pause, 125% or whatever the latest number is.
Right.
And what we've seen from China in this context of rare earths, of what they've done, is they have different tools to respond to punitive tariffs from the President of the United States. Because on some level, when you're just saying 125% tariff on all imports coming from your country, it's like, the market's like, well, what does that actually mean?
Right.
And China's response, they come back in very specific ways. And this is one of them.
Very
which is
targeted.
Like, very targeted, right. So like, great, you hit us with a big tariff. Guess what? We're going to do this one very specifically here. And maybe initially nobody in the market notices it, but people like Graceland and others are like, whoa, hey, let's take a look at this.
All right, so it sounds like the advice is let's watch and see how this plays out, this one in particular. Hey, guys, I wish we had more time. This was so smart, so good. Graceland Bhaskaran, Director, Critical Minerals Security Program at the Center for Strategic and International Studies. Thank you so much. And, of course, Joe Doe, always appreciate any time we get with you as well. Metals and mining, heavy machinery reporter here at Bloomberg News.
Hey, seeing stocks in the green.
If you didn't understand rare earth minerals.
Get out next time.
Go listen to that.
Next time we need a periodic table.
Next time, but not rare.
No, but earth from the earth. Yes.
Good to know. Good to know. We're driving to the close.
Yeah, stocks in the green right now. Up next, Walter Todd, President and Chief Investment Officer at Greenwood Capital Advisors.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got 20 minutes to go ahead of the closing bell. Stocks remain higher. We have got no selling into the closing bell. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with an aggressive bid this afternoon after some uncertainty this morning. The Dow is currently up 677 points. S&Ps are higher by 97, while the Nasdaq gains 2%. The U.S. 10-year yield is at 4.48%. Gold and oil are climbing, and Bitcoin, that's higher by 5%. Among the main 11 S&P sectors, all were trading in the green, led by gains in materials and energy. And leaders to the upside in the Dow, JP Morgan and Apple. Home Depot led to the downside. After earnings, JP Morgan rose 5%. Wells Fargo was little changed, and Morgan Stanley rose 3%. And wrapping things up, the FT reported that the Fed's Collins said the Fed is ready to help to stabilize the market. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend. And for live breaking news over your Bloomberg type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. 19 minutes to go until we wrap up the trading day. I love what TikTok. I feel like we've had a lot of TikToks this week. I love what Charlie had to say, though. We're holding on to our gains. We're getting in the last half hour, last 20 minutes of trading, and we aren't seeing any kind of selling into the close, which I think most market watchers would say that's a strong sign, especially after the week that we've had.
I don't even know where to start.
I did a little Twitter survey.
Okay.
They're super scientific. No standard deviations.
I think your next stop is presidential polling.
I'm gonna tell you. Moving into cash, another risk off, and I got 41% yes, 53% no, 6% thinking about it.
Okay.
So there you go.
Okay, there you go.
Take it for what it's worth.
Let's see what Walter Todd has to say about this. He's president and chief investment officer at Greenwood Capital Associates. He joins us from Greenwood, South Carolina. Walter, a week such as this, where we saw, the best day for the major indices going back more than a decade at one point, then followed by a decline, and now for the week we're up 5.7% on the S&P 500. Not to mention everything that's been happening in the bond market. How do you make sense of it?
Well, you can't get too depressed this Masters week here. We're about an hour away from Augusta National where I sit. But, yeah,
but you're here right now. You're not playing golf or watching golf.
Yes, I'm in front of the screens.
Okay.
Yes, exactly. Unfortunately. But, the volatility that we've seen does, echo of, it reminds me of 2008 a little bit, which is not a good period, excuse me, you want to compare to in terms of the ups and downs. So it is very difficult to make sense of. And we've had, a lot of client calls and interactions over the past, 3 to 4 to 5 days. But certainly feels better when you get these rallies. But I would just note that, a 9% rally that we had on Wednesday from the tariff pause, that's not the sign of a healthy market, even though it feels good because the market's going up.
You're not the first person to say that to us. We've had, I'd say, probably 4 or 5 people say that's not the sign of a healthy market.
No, right? Not at all. And it's, I didn't even look at the VIX today to kind of get an idea of where we were because we'd seen it pretty high today. It's amazing, a different market environment, what you look at and what you don't. VIX down almost 4 points. We're now just below 37, but, we've been as high as we were 60 on Monday.
60. Yeah.
Yeah. So I am curious, the clients who are calling you, the investors who are calling you, what are they asking and what are you doing as a result of it?
Yeah, so the first thing is the preparation ahead of these events, right? Is having a diversified portfolio, mix of stocks and bonds. I know we'll talk about the bonds maybe in a minute.
Yeah.
But so you're not shocked in terms of what happens to your portfolio, and also the preparation for any cash needs that you have being, having that on the sidelines to begin with. So we're able to kind of talk through the circumstances and the situation to, settle people back down. What we're trying to do is look for opportunities within long-term holdings that we have in our equity portfolio, as an example, and take advantage of these dislocations. I think we probably set or have a pretty good level for a bottom around that 48.25 level that we hit on Monday. That was actually the peak in 2020, late 2021, also the breakout level in early 23. So that seems like a good level on the downside, but at the same time, I think we're probably going to be capped on the upside from the breakdown level, which was around 5,600. So I think we're going to kind of be in this range for a little bit, but I am very much looking forward to listening to earnings calls, which I did today, of course, to hear what's happening in real time from management teams.
What's your takeaway? We had 3 banks report today. We had earlier this week, we heard from Delta. We've heard from Fastenal as well. What's your takeaway from the companies you've listened to?
Yeah, I think, both Jamie Dimon and Ted Pick, those are 2 I listened to. I also listened to Wells Fargo. I mean, I think they were more kind of level-headed, if you will. They acknowledge that we're in a slowing environment, both from an economic standpoint and a capital market standpoint. That's factored into their outlooks. But they're, the messaging was, kind of, keep calm and carry on. And even, provided guidance, which was of a surprise a little bit with Jamie Dimon and JP Morgan providing guidance on net interest income, for example. So I would say better than feared, certainly, and you're seeing that reflected in the stocks moves today. But this is just the beginning, and so we're going to hear from a lot more management companies as we head into next week and the following weeks. And I think the look back on first quarter is irrelevant. The look forward on what's happening right now and what they expect going forward is the real information that we're going to get here.
Well, Walter, if we get what Jamie predicts, is a lot of companies not and a lot of CEOs in the C-suite not willing to really commit to some outlooks. How do you commit new money, at least on the equity side of things? Do you not, and you wait until you start to get companies feeling confident again to put out outlooks?
Yeah, it's a great question, Carol. Jamie referenced, if the stock can, continue to come in, they would look to buy it from stock buyback standpoint. So they have some confidence. But to answer your question, I think you got to be comfortable with a couple of things when you commit capital, regardless of maybe some uncertainty or lack of clarity as you look out over the next 3 to 6 months. It's understanding the companies that you own, why you own them, the management teams that run them, the confidence in them, and then you can look for levels to commit additional capital to those companies once if you know them correctly. If you don't know why you're in a name, if you've gotten into something more recently, you're not as familiar with it, you're more likely to sell it at the wrong time versus committing additional capital. JP Morgan's a name we've held for a number of years, and obviously with Jamie Dimon at the helm, we feel very comfortable committing capital. We actually bought some more Monday of this week on the downdraft. Yeah.
Okay, before you go, we promised we'd talk treasuries here and what's going on.
Kind of buried the lead here.
Well, if you look, we're actually seeing yields down at the long end on the 30-year and the 20-year, a reversal from what we saw earlier in the session. The 10-year at 446 right now. What's going on in your view in the bond market?
Yeah, the bonds are the tail wagging the equity dog right now. And I've been fascinated watching this chart. I wish I could share my screen with you, this intraday chart of the S&P and yields. And clearly the market's interpretation of these moves in yields is perhaps a lack of faith a little bit in U.S. assets. So earlier this week, we had all U.S. assets, currencies, rates, or bonds and equities all down. Yields up.
Right.
So that's not a good circumstance, and that's very unusual in times of market stress.
Yeah, I agree with you. I've been watching the equity versus the treasury trade, and it just doesn't quite totally make sense to me today in terms of what we're seeing, especially on a day when we got that University of Michigan sentiment number that was pretty negative. Walter.
The lowest since 1980. Yep.
Yeah, right. I expected, yields to be way lower. We're just living in interesting times. Walter Todd, thanks for checking in. President and Chief Investment Officer at Greenwood Capital Associates. Masters? Somebody said he was watching?
Yeah, Carol, I don't know anything about sports, and I knew.
Second round underway. I used to watch golf all the time with my dad. I told you, I don't even know what day it is.
Friday.
This felt like a month.
Friday and 10 minutes to go until the close of equity trading.
Not that we're Anybody's counting.
Hey, I mean, the green it's holding up 1.8% on the S&P 500.
Close coming your way in just a moment.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio.
All right, everybody, we've got just under 7 minutes to go until we wrap up the trade on this Friday and for the week overall. It's been a big trading week, a lot going on. We're holding on to near highs of the session. S&P up 1.7%, up 91 points. Dow Jones Industrial Average, a gain of about 1.6%. NASDAQ 100 up 1.7%. But you take a look at the week overall, and man, we're looking at some pretty decent gains for these major equity averages. Let me just pull it up on my Bloomberg. Up about 5% on the Dow, up about 5.7% on the S&P 500. The NASDAQ up about 7%. But a lot of that had to do with the surge that we saw on, was it Wednesday?
Yeah, the surge was Wednesday. Yeah. If you know me, Carol, you know I've got my eye on the bond market, and we've seen yields back off a little bit, just a little bit today. Yeah. From where they were earlier, still the 10-year at 4.47%. We actually are seeing yields come down at the long end, the 30-year right now at 4.86%. We'll go ahead and round that up. Hey, a couple stories on my radar.
Where are you going?
They're firmly in the territory of tariffs.
Are you going Champagne first or the other one?
Yeah, I want to go Champagne.
Okay, let's go there.
Okay, so
Harvey Russo.
We're learning a little bit about
Russo, owner of the Flute Bar.
You said it.
All right, go ahead.
You said it yourself.
Yeah. If we're going to talk champagne, it would be nice to have some in here, but hey, who am I?
The owner is considering pouring 10% less per glass for French bottles to avoid raising prices due to U.S. tariffs on European imports.
Pours.
We heard about shrinkflation during what happened with inflation a couple of years ago.
I was thinking about the cereal boxes, right? That like got smaller or bigger? And
Yeah,
less
they stayed
cereal?
small.
Okay.
So if you pour 10% less per glass for French bottles, you can avoid raising prices. This is Hervé Rousseau, the owner of Flute Bar. Here's what he told our own Fiona Rutherford, quote, "We'll explain what we're doing, even do some Instagram reels to talk about it."
10%, what is that, like a sip?
I don't
Sip or
know.
two?
I have no idea.
Smaller pour?
Well, earlier
So
this
if you
week...
have, what do you think you have, like 10 sips in a glass, so 10%? 5 sips in a
Well,
glass?
here's why. A 10% tariff remains in place for most countries during this pause. It's a 90-day pause, remember. Though the sudden policy whiplash has fueled market volatility, he does intend to start the smaller pour if a 20% tariff for EU goods is implemented.
I love what this dude says. He says, Flute has weathered plenty of...
Is that French? Is dude French?
Dude?
Okay.
That's not.
Carol.
It's been quite a week. It's been quite a week. Can you tell everybody? Flute has weathered plenty of crises in its 27 years from 9/11 to the 2008 financial crisis. And he says New York always adapts. But if the broader economy takes a hit on top of price pressures, that could be a much bigger problem. And that's what we're trying to assess at this point. You look at those University of Michigan sentiment numbers, really down a lot, really negative. And so you are worried about, does that turn into actions, right? Lower sentiment, do people then not do things? Do they not travel? Do they not spend? And so it becomes, as you said, a self-fulfilling prophecy potentially that maybe leads into a U.S. recession.
Okay, so Fiona Rutherford wrote this story. She's based here in New York. Let's go across the country.
Where are you going?
More than 2,500 miles. Let's go to Seattle, where we find Spencer Soper, who, along with Lily Meyer, wrote about companies that are slapping, quote, Trump tariff surcharges on customers' bills in a bid to signal where price hikes are coming from. So
are they actually putting that on the bill? He likes to have his name on a lot of things.
They're putting this, but it's not Trump doing it. It's companies.
So they're saying Trump tariff
that are doing it.
Surcharges.
Okay, Ryan Babenzian said that he announced his plan for Jolie Skin Company. It makes filtered water shower heads. Quote, "We think transparency is the way to go here, and I'm giving Trump full credit for his decision to add this tariff to all U.S. consumers."
Yeah, I mean, listen, people are scrambling. If you're worried about protecting your margins, what?
He's calling it a, quote, Trump liberation tariff surcharge. It starts next week. His company is still calculating what the fee will be on top of the cost of a $150 shower head, but they're building software in-house to add the fee to products purchased on its website, which runs on Shopify's platform.
So shoppers out there?
They're going to see the
attention
Trump
shoppers.
liberation tariff as a line item when they buy these.
You're going to pay more. That's not good for inflation.
As of now.
That's Eco 101. All right, folks, do not go anywhere. We've got about 2.5 minutes to go, and we are looking at an equity market that is holding on to its gains. We're going to count you down to the close, look at some of the winners and losers, and wrap up the trading week. This is Bloomberg Business Week Daily. Carol Master, Tim Stenevec. We're back in a moment.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:58 on Wall Street. We do check markets all day long here at Bloomberg. We got ourselves a Friday rally. What a week it has been. 2 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ, all holding on to gains into the close. Stocks on track for the best week since 2023 as the bond rout eases. Stocks rebounded today. The S&P 500 index now up by 1.8% on a report that the Federal Reserve is ready to help stabilize markets following a chaotic week that underscored fears of foreign investors retreating from American assets. So bottom line here, ahead of the close, the Dow, the S&P, and NASDAQ all advancing. This on a bank earnings Friday. Walter Todd is president and chief investment officer at Greenwood Capital. Moments ago, right here on Bloomberg Business Week Daily, he told us, yes, he was listening in to those bank earnings calls this morning.
Both Jamie Dimon and Ted Pick, those are two I listened to. Also listened to Wells Fargo. I mean, I think they were more kind of level-headed, if you will. They acknowledge that we're in a slowing environment, both from an economic standpoint and a capital market standpoint. That's factored into their outlooks. But they're, the messaging was, kind of, keep calm and carry on. And even, provided guidance, which was of a surprise a little bit.
Walter Todd of Greenwood Capital. Keep calm. Carry on. JP Morgan Chase up 4%. Wells Fargo today down 1.1%. Morgan Stanley up by 1.2%. We hear from Goldman Sachs on Monday. And BlackRock today up by 2.4%. There it is. Sound of the closing bell. It is on to the weekend. Folks from YPF ringing that closing bell at the New York Stock Exchange. Here are your closing numbers. The Dow, the S&P, NASDAQ all advancing. S&P up 95 to 53.63. That is a gain of 1.8%. Dow Industrials up 618, a gain of 1.6%. NASDAQ up 2.1% today, up 337. The 10-year 4.46%. The 2-year 3.95%. Spot gold up 1.7%, 32.31 an ounce. And West Texas Intermediate crude up 2.4%, 61.52 a barrel. So bottom line here, did turn out to be an up week for the Dow and the S&P. For the week, the S&P 500 index advanced 5.7%. For our on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody. S&P rising 5.7% for the best week since November 2023. Welcome back to Bloomberg Business Week. Carol Masser, Tim Stenivek, live here in our Bloomberg Interactive Brokers studio. Coming up this hour, we're going to talk about the trade war. We're going to talk a lot about U.S. and China. Go there in terms of what is this relationship, how complicated, how intertwined it is, and is an uncoupling even possible? I think this is really important to understand the relationship between the two. It's a difficult one, we know, and it gets, I feel like, more difficult every day, but we're going to get into it in just a moment.
We're also going to talk commodities with the founder of Fair Trade USA, talking sustainable global supply chains amid this trade war. In the meantime, we're taking a look at how the markets closed out the day and the week. Carol, you mentioned some of the numbers and the superlative going back a couple of years. The S&P 500 up 1.8% to finish off the week at 5.7% to the upside. This was a big kind of reversal from earlier in the session.
Absolutely.
Didn't finish off at our highs of the session. It was up as much as 2.2% earlier in the day, but it was as low as 0.9% earlier in the session.
Yeah, but what's interesting is, you know, we finished, as you said, maybe just off our highs of the session, but nonetheless, we didn't see a bunch of selling into the close, into a weekend where, as you know, in this environment, a lot of news can certainly happen. And as we continue to do tick by tick, this trade war that we have seen really go full bloom this week. Having said that, as Tim mentioned, up 5% on the Dow Jones Industrial Average, just shy of 5%, 5.7% higher on the S&P 500, and the NASDAQ up more than 7%. If I look at the sectors in the S&P 500, there are 11 major sectors. All of them gained today. Materials at the top of the pack, up about 3%. Information technology up about 2.6%. And then, Tim, for the week overall, you're looking at most of the names up. Information technology, some of those big tech names up almost 10% for the week overall. Industrials up about 6.5%. Communication services up 6%. Financials up 5.5%. Just real estate down about 0.1%. Energy names down about 0.4% for the week overall.
And taking a look at the bond market, we did see yields back off a little bit, but still rise across the curve, except at the long end of the curve where we saw the 30-year yield fall ever so slightly today. The 10-year yield right now at 4.74%.
And just one more thing I want to throw into it as we think about...
Excuse me, 4.474%, not 4.74. I repeat, 4.474%, excuse me.
Nowhere near plus 4%. Speaking of safe havens, and the Treasury market, certainly it feels like we're questioning that. At least some investors seem to be. We saw that this week. But I'm looking at gold. Gold futures up about, or gold, I should say, overall up about 7% for the week, up more than $200 an ounce. $3,250 we're finishing up on the week. So again, you saw investors continue to move in that, and as a result, you saw a bunch of the mining names higher this week as well.
Also, Bitcoin higher by 5%, Ethereum higher by 2.3%. Carol, did we forget anything when it came to going cross-asset?
Well, no, but I'm looking at the VIX down about 3 points. I haven't looked at the VIX overall. Let me just pull that up. Most folks have said, yeah, expect more volatility. Went down about 7.5 points this week. So we did see a pullback, but we were as high as 60 earlier in the week. We were as low as about 32, but finishing the day about 37.6. So definitely down from the highs. But most folks have said expect more volatility, at least until we get maybe some more clarity about where this trade war ends.
Well, speaking of the trade war, that's exactly where I want to go now, because China retaliated against President Trump's latest tariffs by hiking duties on all U.S. goods while calling the administration's actions a, quote, joke, and saying it no longer considers them worth matching. Leland Miller is CEO of China Beige Book. It's the company that provides data that tracks the Chinese economy. He's also commissioner of the U.S.-China Economic and Security Review Commission. Leland, Trump and Xi are locked in this standoff over who will move to de-escalate first. What's the next move here?
Well, the next move is to de-escalate one way or another. You can keep moving these tariffs up higher and higher and higher, but they don't, from an economic standpoint, that doesn't matter anymore. There are very few goods that are going to be economically competitive at, say, 50%, but not at 100%, or at 100%, but 50% to 100%, 80% to 120%. We're at 145% for some goods right now. We stopped being economically competitive in this trade a long time ago. So it's not about how much higher tariffs can get. It's not even where they are now versus yesterday. It's about whether this is going to be sort of a short-term disruption and someone's going to step in and say we need an off-ramp, or whether this is the beginning of a broader decoupling.
Leland, this is why we wanted to touch base with you again, because I think we need to understand the U.S.-China relationship. We've talked for a long time how they need each other, but at the same time, we've talked about decoupling over a few years now. So explain the U.S.-China relationship, why it's still either crucial, intertwined, and hard to untangle.
Well, these are the two biggest economies in the world. You've got the biggest consumer market in the world. You've got the biggest producer in the world. There's a lot of interwoven supply chains throughout. So there has been decades worth of trade that has been built on the idea of the U.S. and China being principal parts of those supply chains together. So there's a lot to potentially disrupt. Now, when people talk about decoupling, they mean all kinds of different things. If you're talking about broad decoupling, financial decoupling and all kinds of other things, it could be a very big deal. If you're talking about sector by sector decoupling, we've already been seeing that. So in the tech sector, we've already been seeing a move away from allowing Chinese technology in the U.S. and U.S. systems, the U.S. technology, some Chinese systems, been pushing back on that with lots of export controls and other things. So you can see some aspects of decoupling, but a broad decoupling where you just sort of cut the knife down the middle of the cake, that's a much bigger deal economically and otherwise.
Can that even happen?
Well, it's hard to imagine that happening outside of sort of wartime scenario because of the disruptions would be so significant on both sides. Now, if you keep tariffs at 125% plus going forward, then you're going to have a decoupling. So what would happen then is you'd have a lot of dislocations from this. It's possible for the U.S. to move away from China as a supplier, and it's possible for China to move away from the U.S. as a supplier and to sort of move those relationships apart from where they've been traditionally. Very hard to do that overnight without severe problems in supply chains and price hikes and other things. You don't have immediate substitutability for a lot of these things. The quicker you do a decoupling, if you're going to do a decoupling, the more disruptions you're going to see and the more intense market reaction you're going to see.
When do you think consumers are going to start to see disruptions caused by this? Carol and I were just talking about the way that certain companies are adding a Trump Liberation Day or a Liberation Day tax to a surcharge, I guess you could say, to certain products. When do you think consumers are going to start seeing this?
Well, they'd start seeing it pretty quickly, I think, but it's very different. A lot of what people don't see is that China's, a major provider of intermediate goods. And so a lot of the parts that go into things that are sold by other people, including the United States, come from China. So if you start taking those out of the equation because they're priced out of the U.S. market, or in some cases prohibited altogether, then you start seeing supply disruptions. Then you start seeing significant price pressures, particularly in very specific sectors, and you have a lot to worry about. So I think a lot of this is about what is the timeline for doing this? Have we just snapped our fingers and moved to 125% tariffs going forward, which again, I don't think is going to be the case. But if we do that, then you have to be prepared for disruptions. You have to be prepared for price hikes in specific sectors.
What ways can China get around this? And I think specifically about transfer shipping, the idea of shipping goods that are actually made in China to a different country before then they make their way to the U.S. Do you have any numbers behind that? What do we need to know?
Transshipment, nobody knew what that was a few years ago. Now, I spent all day today in meetings discussing transshipment. It's extremely important. The idea being, of course, that, if the U.S. is trying to tariff China and say, we're going to tariff you at 100%, if China can simply take the item and send it to Vietnam or Malaysia or somewhere else in Southeast Asia, Mexico, and relabel it as a new product and send it through, then it could avoid tariffs. And what you do there is you avoid what the intended policies by allowing a third party to be the shipper into the United States. That used to be widely ignored. Now I think there's a wide appreciation in D.C. that something needs to be done about transshipment, because whatever U.S.-China policy settles at, you don't want it to be easily avoided through shipping products through third parties. That's why there's going to be a lot of push from some of these traditional transshipping countries. There's going to be a lot of push to get their house in order, to get more transparency, and to avoid this, or they're going to be punished themselves.
Hey, Leland, you have a great window into what's going on in the Chinese economy. How much pain can the Chinese economy take and kind of hold off on maybe giving in at all? In terms of what the U.S. wants here, I guess it's like the game of chicken, right? How much leeway does China have in order to do that?
Well, the Chinese system is different than Western systems. It's a non-commercial financial system, and there's a lot of downsides to that. But one upside is they can take capital and from one part of the system and swoosh it to the other side in order to deal with problems. So if you have failing companies, you direct the capital to bail them out. If you have other problems, you just rearrange your economy by one entity backstopping another, which backstops another. So what you do there is you avoid the possibility for an acute crisis. Everyone said China was going to be the next domino in the global financial crisis. It was never going to be. You're not going to see a Chinese collapse in that way. But what you do see is a system in which China will just keep plugging holes. A lot of their capital that they'd like to be going into innovation would start going into non-productive uses like bailing out, dying firms and things like that. And you have a continued slowdown in the economy. So China has a lot of ability to push back against, an all-out onslaught by the United States or by the West in terms of a trade war. But it does come at a cost.
Who has more leverage?
Well, if you're talking specifically trade, the United States has more leverage simply because we're a big importer. China's a disappointing importer. They need to export a lot, including to us. So if you look at the trade balance, it's very clear the United States has more leverage over China, particularly bilaterally, than China does over the United States. But when you start getting to this level of tension in the relationship, you're not just talking about trade flows. You're talking about other things, technology controls. You're talking about investment restrictions, and maybe even things that go outside that. And so, supply chains are an issue that just we're not paying enough attention about. If China has leverage over certain supply chains, it could turn them off and turn them on, then that causes enormous disruption regardless what the trade numbers are. And you see that in critical minerals. You see that in other things, pharmaceutical ingredients. The United States has no idea what its vulnerabilities are to China in terms of providing antibiotics to the country, because we haven't done our job in figuring out what is actually going on. So it's not just about trade. A trade war can escalate into something broader, and we're on the verge of that right now.
Another thing, though, and a Chinese vulnerability, I think it's safe to say, we talked with our Mark Gurman about the Apple supply chain, and, he writes there are millions of people employed by the Apple supply chain in China. This was a source in his story. I mean, China also wants to make sure that those workers are kept working.
Well, that's why they don't like 125% tariffs. Yeah, I mean, look, there are.
But my point is that they don't want a lot of people unemployed, right? So if all of a sudden there isn't U.S., the big consumer of the world, buying goods from China, that's a problem for China as well.
Well, look, if you're talking about Apple, for instance, of course, they have been sort of gradually diversifying into other countries where they can. But the problem with Apple is they went all in on China decades ago, and they thought they were smarter than everybody else by saying, look, we have great relationships with the leadership. We're making things extremely economically because we're using this Chinese supply chain. What they didn't realize is that over the course of several decades, they were also relying on China. Now, China is reliant on some of these companies coming in and employing Chinese labor. But at the same time, Apple does not have the ability to diversify its supply chains overnight. So there's this mutual inconvenience here because of the dependencies that were created, years and years ago.
Leland, I want you to give us a prediction. In your view, how this trade war ends and when the dust settles, what it looks like.
Yeah. I don't know if anybody could do that. What I will say is that the idea of 125% tariffs, continuing at this level going forward, I think that's unlikely. I think we will see someone reach for an off ramp. I know the President Trump does want a deal. The question is that if there is some sort of phase 2 deal or there's an off ramp with the idea that you're going to move towards a phase 2 deal, what does that look like? If phase 1 is simply phase 2 renamed, then does that really move the needle for Americans? And is there political pushback on that? So I don't doubt that both sides are sort of looking for an off-ramp, but there doesn't seem to be the narrative right now. What does the U.S. side want? Chinese side would have no problem whatsoever going back to the status quo because it's very treated by the status quo. The question is, if the United States is trying to disrupt this, what do they want from China? If they're trying to get a lot of commodities buys going forward, that's one thing. If they're trying to restructure the Chinese system, that's a much tougher haul.
Not going to happen. No?
Not going to happen. It's not going to happen by asking them to do it.
Yeah, that's for sure. Hey, listen, just got about 45 seconds left here. If they don't figure out something that is more measured, what are the implications for the Chinese economy and the U.S. economy?
Well, anything that was shipped as part of this, you're going to have to figure out, are there sector exemptions? What other things are you going to do? You're going to have to start subsidizing sectors of both economies in order to deal with the dislocations caused by this. This is being done very quickly. There's no preparation. And so as a result, you're going to have to figure out how to take care of the people who are being affected, but also try to replace those supply chains as quickly as possible. In some cases, that will be doable. In other cases, it may not be doable. So we're going to uncharted territory right now.
All right. Going to leave it on that note. Hey, Leland, thank you so much. Leland Miller, he's the Chief Executive Officer of China Beige Book International, joining us. He's also Commissioner, U.S.-China Economic and Security Review Commission, joining us there from Washington, D.C.
Hey, the numbers at the close today. The S&P 500 did not finish at its best levels of the day, but this was a rally, 1.81% higher on the S&P to bring it to 5.7% on the week. That's the best week going back to November of 2023. The NASDAQ Composite higher by 2%. The Dow higher by 1.5%.
All the back and forth. It's amazing that that's what we're saying on this Friday.
Hey, coming up next, we are sticking with trade, specifically commodities next, with the founder of Fair Trade USA. That's next on Bloomberg Business Week Daily.
421 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index just wrapping up its best week since November of 2023. On the week, the S&P was up by 5.7%. Stocks rebounded, with the S&P today up by just about 2% on a report that the Fed is ready to help stabilize markets following a chaotic few days that underscored fears of foreign investors retreating from American assets. S&P today up by 95 points, finishing the week heading into the weekend at 53.63, up by 1.8%. The Dow up 619, up by 1.6%. And NASDAQ today up 337 points, up by 2.1%. The 10-year 4.49%, the 2-year 3.96%, gold up 1.8%, 32.33 the ounce. West Texas Intermediate crude up 2.5%, 61.55 a barrel, and Bitcoin up 5%, 83,839 on Bitcoin. On an update for the rest of the market, Tesla little change but down less than 0.1%. Tesla did stop taking orders in China for Model S sedans and Model X SUVs, both of which are imported from the U.S. after the countries raised tariffs on one another in an escalating trade war. Recapping, S&P up 95, up by 1.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, farmers are worried that Trump's trade war with China could cause disastrous consequences for their ability to sell soybeans. Even before the current administration took the reins, farmer income had been under pressure for a couple of years as the cost of seeds, fertilizer, and equipment went up and crop prices declined. That's what's going on here in the U.S. with this trade war.
Exactly.
We want to go outside of the U.S. and talk to somebody who's spent his career thinking about where products, where commodities come from, who brings them to us, how they're compensated, and the working conditions of those individuals. Paul Rice is the founder of Fair Trade USA. It's the nonprofit Fair Trade Certifier. He started nearly 30 years ago. The organization says that a product is a fair trade certified, and that means that it was, quote, made according to rigorous standards that protect the livelihoods of farmers, fishers, and other producer communities and the environment. He's got a new book out. It's called Every Purchase Matters: How Fair Trade Farmers, Companies, and Consumers Are Changing the World. He joins us from Berkeley, California. Paul, great to have you. Congratulations on the new book. It's perfect to have somebody who understands trade and tariffs. You certainly understand these things. What is your view on tariffs, specifically with regard to the world where you've spent the last 30 years?
Well, tariffs are bad. There's no other way to put it. Tariffs are dumb, and they're going to hurt a lot of people. They're going to hurt American consumers, as we all know, because the cost of things that we buy are going to go up. And it's going to hurt American business because there's retaliatory tariffs. I recently spoke with a U.S. company that sells about 40% of their roasted coffee into Canada. Retaliatory tariffs are going to make it harder for him to do that. And finally, the tariffs are bad for sustainability.
Oh, interesting.
You know, the onus is going to be pushed back onto a lot of developing world farmers and factory owners to absorb some of that extra cost. And it's going to pressure a lot of people to cut back on sustainability measures that, you know, things like installing solar panels or, you know, providing better housing for workers. So all the way around, tariffs are bad.
One of the reasons we wanted to speak to you is because the products that we see the fair trade certification on are often products that you can only get outside of the United States. And I think it's fair to say the reason the president wants to impose these tariffs are because he has, in his view, the U.S. has been treated unfairly when it comes to trade. He wants to see manufacturing specifically and production specifically move back to this country. Is there a disconnect in your view, given that some of the stuff that could see tariffs on it, you can't actually produce here in the U.S.? Like, help me make sense of that.
Yeah, a huge disconnect. I mean, 70% of Americans drink coffee. The U.S. can't grow coffee, right? Coffee comes from Latin America and Asia and Africa. And, you know, similarly, 80% of Americans eat bananas. Guess what? We don't grow bananas in the U.S. We import them. So tariffs are going to hurt Americans because all of those things that we love to drink and eat, like coffee and bananas, the price of those are going to go up. But furthermore, tariffs are really going to hurt those farmers around the world. And so, what is quite possible is that a lot of those businesses are going to fail because they cannot absorb the tariff, which means more workers out of work. I mean, imagine what happens if unemployment goes up in Mexico, what kind of pressure that puts on the southern border. There's nothing good about this whole tariff policy.
No, when I think about, Paul, supermarkets, certainly here in the United States, they live on such slim margins. So they have no choice but to pass any additional costs off to consumers, correct?
Either they'll pass it on to the consumer or they'll push it back onto the producer. And that's what I mean by, companies in Mexico, for example, going belly up or having to lay off workers. If Whole Foods or Costco or Walmart decides to push some of that extra cost back onto the producer, then we're going to see some severe business disruption south of the border, which is not going to help our national situation at all. And on the similarly, even if it all gets passed on to consumers, with prices already high, will consumers pay more for imported strawberries or tomatoes or coffee or bananas? I don't know. I think it's quite possible the demand goes down, which means a ripple effect around the world that it's going to be a tremendous hardship for a lot of people.
Well, that brings us to your book, and as we said, it's entitled Every Purchase Matters, How Fair Trade Farmers, Companies, and Consumers Are Changing the World. Fair trade, I think it's thrown around. I think we like to buy fair trade goods, but explain to the world, just remind them what fair trade is all about.
And you're talking, when you ask the question, Carol, you're asking about fair trade like capital F, capital T, fair trade, not the concept of
fair trade. No,
which is
exactly.
subjective.
Which is something the president might use. But no, what fair trade?
Fair trade certified. Right?
There it is. Trader Joe's coffee you're holding up.
So what gets that certification? What has to happen in order to get it?
Yeah. So fair trade is a rigorous 200-point checklist of social, labor, and environmental criteria that farms and factories meet and get audited against every year in order to wear the fair trade certified label. And on this side of the market, our 2,000 plus market partners from Whole Foods to Target to Walmart all agree to pay a small premium back to those farmers and workers, which they then can invest in healthcare and education and better housing. So fair trade, through the lens of global development, it's a market-based approach to global poverty and to protecting the planet. For us, the consumer, increasingly consumers want to know that there's no child labor in our chocolate bar, and that the environment wasn't destroyed in the production of our coffee. So fair trade is a way that we as consumers can feel reassured that the products we're consuming are produced in a responsible and sustainable way.
What are the checks that are in place to make sure these sustainable practices are followed when the folks from your organization are not watching, when they're not there visiting these plants?
So our 1 million plus farms and factories are audited every year. The auditors talk with the workers. They visit the production sites. They do a rigorous inspection, and that happens every year. And in addition, of course, all of the brand partners, or many of the brand partners, are visiting those farms and factories every year. So it's an incredibly rigorous oversight. And the producers, for their own part, tend to be producers that are really bought into the notion of greater responsibility, and they're getting this premium. So producers don't want to run the risk of losing the annual premium they get. So there's a real alignment of incentives where the producer, the farmer, or the factory owner get more money, the brands get a more secure and reliable supply chain, and the consumer gets a product that makes us feel good because it's helping lift workers out of poverty, it's ensuring fair wages, and it's helping to protect the environment.
I didn't know Driscoll's had kind of gone through a little bit of a path. Driscoll's, I think about strawberries, right? Like
every berry.
Every berry is Driscoll's. There's the organic, there's the non-organic. We are Bloomberg, and we think, Tim and I think a lot about profitability obviously, right? Here we are in earnings season. But at the same time, the ability to be a good company, be a good corporate citizen, do well. What is kind of the financial story of sustainability or fair trade practices?
Yeah, I love this question, you know, because I spent 11 years working with coffee farmers in the mountains of Nicaragua in my 20s, and then moved back here to start fair trade. And I've always felt that fair trade would never work for the farmers if it didn't also work for business. So I've spent, you know, the better part of the last 30 years working directly with companies to develop a strong business case for sourcing in a more sustainable way. Not just because it's the right thing to do, but because it creates value for the firm, right? What Michael Porter at Harvard calls shared value, right? So there's value for the farmer, for the worker, for the planet, but also there's supply chain resilience for the company, there's brand differentiation for the company, and there's, you know, that emotional gratification as a consumer that we feel when we buy something knowing that it did no harm. I'll give you a recent example. Walmart piloted fair trade tomatoes and saw their sales go up by 3% when the label went on the package. Now, who would have thought that a Walmart consumer would care about tomato farm workers in the developing world? And in fact, they do. And so it's just an indication of the business case for fair trade, right? The consumers are moving in this direction. They're voting with their dollars, if you will, for the kind of world they want to see. They're looking for more socially and environmentally responsible products. And quite frankly, this macro trend is politics proof. I just wrote a piece for Wall Street Journal, an op-ed piece entitled, "Will Sustainability Survive Trump's Second Term?" And the reality is the business community is moving in this direction, not just because it's the right thing to do, but because it's better business and it is better for business.
Paul, is there anything that cannot be produced, in your view, in a fair trade way right now?
Can an iPhone? I don't even know if that
We
makes
would
sense.
love to work with Apple on fair trade iPhones. We're not there yet. But over the last 26 years, you know, we started with coffee, and then year after year, we engaged with lighthouse brands, pioneering brands who wanted to take us into their industry. So now we work in apparel, we work in cosmetics, we work in in furniture with Williams-Sonoma Inc., and we're certifying seafood, we're certifying dairy, we certify farms and factories in the U.S. now, not just abroad. And so, you know, our vision is fair trade for all, and it's the notion that any and all supply chains, domestic or international, can embrace responsible sourcing practices. And so, yeah, stay tuned. Maybe next year you'll bring me on when we have fair trade iPhones.
All right. We will do that. We will
it.
do that. We will hold you to it. Paul, thank you so much. Paul Rice, glad we could finally get to you. Founder of Fair Trade USA. His book, Every Purchase Matters, How Fair Trade Farmers, Companies, and Consumers Are Changing the World.
Paul, thanks for your patience, too. We had to move you many times this week due to the breaking news when it came to markets. Speaking of markets, finishing out the week on a high note, the S&P 500 up 5.7% this week. It's best week going back to 2023, up today by 1.8%. You're listening to and watching Bloomberg Business Week Daily.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all advancing, with the S&P today up 1.8% on the week. We did have the S&P 500 index also gaining this week, up by roughly 5%. On the week, the NASDAQ Composite Index was up by 7.3%. Stocks rebounded, with the S&P higher on a report that the Fed is ready to help stabilize markets following a chaotic few days that underscored fears of foreign investors retreating from American assets. So today, as I mentioned, the S&P up 1.8%, the Dow up 619, up 1.6%, NASDAQ up by 2.1%, with a 10-year at 4.48%, the 2-year 3.95%. Gold up 1.9%, 32.37 the ounce, and West Texas Intermediate crude up 2.4%, 61.51 a barrel. Sarah Hunt is Chief Market Strategist at Alpine Woods Capital Investments. She says everybody is grappling with uncertainty and heightening the volatility.
I think all of us are trying to figure out what's been going on underneath the surface and or the size of some of these moves, how problematic that is, because so many firms have levered up more and more as we've had less volatility, and then you get volatility that is off the charts, and you have to think that there are some reactions to that, and some of those are going to be people making a lot of money, and some of them are going to be the opposite.
Sarah Hunt of Alpine Woods. Bank stocks mixed today after earnings. JP Morgan Chase up 4%. Wells Fargo after earnings down 1%. Morgan Stanley up 1.4%. BlackRock up by 2.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Really do appreciate it. There's a voice that we go to when we want to make sense of a crazy,
put a bow on it this week.
Crazy week, and I think this qualifies as a crazy week.
We mean it.
How does he know we're talking about him?
I don't know.
It's yeah.
Okay.
Well, I mean, it's like I've been married twice, but I've never been told I'm the voice to go to. So there you go.
The voice to go to in this case that you're hearing from right now is Vince Signorelli. He's global macro strategist for the Bloomberg Markets Live blog. He joins us from White Plains, New York. Vince, for the week, the S&P up 5.7%, but a volatile week, a week that we saw the biggest decline in the S&P 500 going back to 2008, but also the biggest gain in the S&P 500 going back years as well.
I guess when a VIX hits 60, that's the kind of week you're going to get, right?
Yeah, you probably saw the downside in 2008 and probably the upside in 2009 or something along those lines. It's really been volatile. I mean, volatile is an understatement. This is the kind of trading that really took place way before the machines, when it was just humans, and you would see these big gaps in markets and on a daily basis, not even on the occasional basis. So we haven't seen anything like this since machine trading in a realistic sense, and we've had moments, but not in a week and actually probably more like 7 or 8 trading days, not more some of last week as well. And the volatility is probably going to continue, possibly not at this level, but there's still so much uncertainty out there. We still have this 90-day tariff sort of pause going on, so who knows which way the wind's going to blow next.
Okay, so good that the market functioned, right? And the plumbing works.
Yeah, that's always a good sign, I think, when the plumbing works.
We're happy. I still feel like we're dissecting the concept of American exceptionalism no more, and treasuries, right? We saw quite a slide, quite a move, especially way out on the curve. So I'm just, I want to be smart here as we go into the weekend. I'm grateful that equities ended on a high. But I mean, what have you been hearing on, as you were talking with traders and covering the markets, about the treasury trade and where we are?
So 2 things. Number one, it's starting with equities and then working back to trade. I'm sorry, working on treasuries and then working back to the trade situation. Treasuries, you have to understand what you're looking at partly is 2 things. Number one, you're probably seeing some foreign governments, foreign entities selling treasuries, moving out of U.S. assets a little bit. You're also probably seeing what was a positive trade. So as equities declined and you have hedge funds having losses, they need to sell a positive trade to counteract the losses, to balance the book. And so they're selling treasuries to bring profits in to keep the hedge fund imbalance to not cause drawdowns, if you will. The other side of the coin is the trade situation, and what's kind of getting overlooked, and I'm getting this from sources out of China. There was a meeting on Tuesday between Xi and basically the Economic Council of China, and they came up with pretty much three things that are somewhat in of demand. The U.S. needs to correct their attitude. The U.S. was the party that escalated this tariff war, and if the U.S. continues to escalate tensions, China does not rule out further countermeasures. And the meeting ultimately decided on 4 countermeasures, primarily basically sitting on the idea that she's going to be making this whirlwind tour among countries in both Asia, Europe, et cetera. And they're going to try to shore up individual agreements with countries to basically counteract what the United States is trying to do. And Beijing is digging in their heels at the moment. So where we hear this rhetoric out of the administration that China is trying to figure out a way to come to the White House, what Trump was saying, they're trying to figure out a way to talk to us. What I'm hearing from China is the White House actually reached out to China, and China rejected the invitation, if you will, based on the fact of those premises that the United States basically really needs to tone down their rhetoric first. So this actually could be escalating. This could be the beginning of escalation, not where we're seeing the peak of escalation. Going forward, we may see 2 countries standing off, trying to go their own way, both trying to gain ally support to use against some sort of coalition against the other. And depending upon how that works out, who gets the upper hand in that, this could go on for quite some time.
Like, when you say quite some time, Vince, what do you mean?
I mean, we could go at least for the next 90 days to possibly 6 months. No one's rolling over just yet.
What happens if we go 90 days to 6 months with these tariffs between the U.S. and China in place? What does our economy look like, and what do our products that we buy that are produced in China look like? How much do we pay for them?
I mean, it's nice to see the Fed coming around today. They're realizing that tariffs cause inflation. I've been waiting for that shoe to drop. Tariffs cause inflation. There's no doubt about it. I won't go Smoot-Hawley on you back to 1932, but certainly tariffs of a substantial magnitude just greatly reduce economic growth. We don't have the. You can't just flip a switch and bring manufacturing to the United States. The iPhone is the perfect example. We just don't have the wherewithal to be producing iPhones here in the United States tomorrow. We have the desire to do, but certainly not the ability to do.
Yeah, we did a deep dive with Mark Gurman on that, right? That's just not something, as you said, you flip a switch and you make it happen. I want to go back to what you said, the Fed and inflation, because we did have the Fed, Bank of New York, President John Williams. He says he expects slower economic growth, higher unemployment, and a pickup inflation due to U.S. tariffs policy and reduced immigration. So the Fed, in a quandary, right? They're saying, hey, folks, we're still on that inflation fight. So tariffs, if you cause some problems and you cause even higher prices, we might have to, we can't cut rates, and we might even have to raise rates. Is that a possibility?
Absolutely. I mean, I won't suggest that it's to the extremes of the 1970s, but if you go back to the 70s, you saw a situation where we didn't have tariffs, but you had oil embargoes. So you had the equivalent of tariffs, if you will, where the Middle East was essentially placing a tariff on the rest of the world by cutting off oil supplies, and oil prices went up dramatically and energy prices went up, and therefore inflation went up. And even as the economy was slowing, you had Burns in a situation where he couldn't cut rates. Hands were tied, and then Volcker came in and said, okay, now the only way to fix this is to dramatically raise rates. I don't see the same scenario where we're going to see that kind of escalation in both inflation and interest rates higher, but you may see Powell have to turn around and say, we are nowhere near our 2% target, and realistically, we're never, I don't think, ever going to get to a 2% target. But even if you want to say 3% target, we're nowhere near 3% realistically.
Right.
And if we start to climb towards 4, he's going to have to raise.
I got a really important question. I got 20 seconds here. What's your drink of choice going into the weekend?
You know, I have been on the wagon. It's almost 4 weeks now.
Wow, good for you.
So I've lost over 20 pounds, so that's my
What a time to quit drinking, though.
I know, right? But
Well
I keep
done.
thinking of that movie. What a time to quit sniffing glue.
Vince Signorella, have a good weekend.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are getting ready to wrap up on this Friday for the week overall.
Did we make it?
I don't know. I'm alive. And
Did we make it, Carol?
Are you real?
I don't know.
Is this a dream?
I never thought we'd be in this position.
Who are you? Where
Friday
am I?
afternoon. The markets didn't freak out one way or another today. The bond market, well, maybe. But.
Yeah, we are TBD still on that one, and we'll see what happens. S&P 500 notching its best week since November of 2023. Treasury market, though, yeah, there's some questions there, and questions of American exceptionalism and whether or not investors are backing out.
I'm grinning. I have no idea what's going to happen this weekend. And we're going to start to hear a lot from companies next week.
Right. Big earnings.
Yeah.
Kicking in real time. Let's take a look, though, at some stocks on the move this week. In the week that was, a little bit of a crazy one and some volatility. Emily Grafeo has the hard task of keeping track of it all. She's Bloomberg News cross-asset reporter, and she's joining us in studio. We got to start with the #1 performing stock in the S&P 500 this week, Newmont.
This is so emblematic of the safe haven asset that gold was this week. In a week where stocks were extremely volatile, Treasury bonds didn't quite work as that safe haven asset that they typically are expected to. Gold kept hitting record high after record high. Gold miner Newmont actually had its best week since 1998.
That's nuts.
What?
That's nuts.
What are we talking about?
Should I
here
go into my
week-wise?
jewelry box and sell my gold?
And start, I mean, it was.
Should I?
Up.
You know,
I know. You think about, that's from an old boyfriend. I'm not going to wear it anyway. I'm getting rid of it.
excuse me, I want to hear this story.
Don't you? I don't know what it is with guys and girls. Like anything I've owned before my husband. I mean, it's been a long time.
You kept?
Well, there's like maybe one or two. He's like I can't. No.
I don't think I've gotten gold.
Love this. Love
you know,
this.
I'm young. The guys are young. I've gotten like silver. So I'm like, I get rid of that.
Sure, it's on platinum? No. Okay.
Yeah.
Anyway, continue.
As long as it's not uranium, right?
Right. Yeah. No, you wouldn't
We
want
were
to put
talking
that
about
on
that
your
earlier.
skin.
We talked about uranium earlier this week, so that's why I bring it up.
Uranium jewelry?
No, uranium stocks.
Oh, got
Stocks,
it.
ETFs.
We're all,
I wasn't sure where you were going.
Carol, when Emily Griffith is in the house, we're always talking stocks.
I know.
Okay, it's like she goes
we
cross
also get
asset.
a little cuckoo.
She goes cross asset. She does ETF. She does everything.
I know.
And you know, Newmont is kind of it's cross asset. It is a stock, but it's representative of
absolutely
one of those assets that did really well this week. Anyway, it was up 8% Friday, up 24% on the week. It ended the week with an upgrade over at UBS. So they hiked their price target both for Newmont, the stock, and also for gold. And they said that the macro backdrop for gold is increasingly more supportive. So,
all right, let's go to NVIDIA.
Okay, NVIDIA, I'm going to go
Also
over...
a top performer for the week overall.
It was a top performer over the week, but it was up on Monday, it was down on Tuesday, it was up 18% on Wednesday, then it was down 6% Thursday, it finished Friday.
It's like a roller coaster,
It's
huh?
really a roller coaster. I mean, this is a stock that everyone watches, so not only is it trading on its own fundamentals, but it's also trading like the poster child for how are risk assets doing today.
Can I just say it's down 17% year to date?
Year to date.
Yeah, 17%
I think we
lower.
all forgot about the DeepSeek
right?
news that happened before tariffs, but I have heard I've seen a few notes where analysts mention like, well, don't forget about the fact that all of these questions about the impetus for spending on AI and, you know, how much demand is there really going to be for AI post DeepSeek?
I mean, there are so many questions about for the company this year. You mentioned DeepSeek. There's the China, everything happening with China. And then, of course, there's also, like you said, demand when it comes to U.S. companies and the reports that we've gotten about U.S. companies pulling back on data centers.
Yeah.
You forgot the biggest stress point.
What is it?
What will be Jensen's next leather jacket?
No, it's going to be a leather jacket.
It's going to be a leather jacket. But what's wild is one of the best performing in the S&P, so up around a little bit more than 17% for the week overall. It's still down 17% year to date, which is just reminds you how rough a year it's been for.
Right. And it ended the week positive, but just like the S&P 500, there were a lot of twists and turns. So you wouldn't expect that we would have. It doesn't feel like we ended the week up, even though we did.
You mentioned the end of the week. We were all looking forward to the end of the week because the big bank earnings started. And it's safe to say the one that we always want to see what they're doing and what their CEO is saying is JP Morgan.
That's right. That stock was up on the week. It was up 12%. This is the biggest U.S. bank. And it was interesting because in their earnings, they had record equity markets revenue. It rose 48% to a record $3.81 billion. This wasn't even counting the trading of this week because this was the prior quarter.
That's a good point.
So I thought that was an interesting tidbit. I'm sure that those equities traders made a lot more this week. And then, of course, Jamie Dimon, CEO atop of JP Morgan, he is pretty vocal about his views on the economy, and he struck a cautious tone. He also said he expects a, quote, kerfuffle in the U.S. Treasury market that would prompt a Fed intervention.
Which made me think about the book Knuffle Bunny. Did you ever read that?
Oh, yeah. There's a little statue.
It's a great kid's
There's
book.
a Knuffle Bunny statue at the library in Park Slope.
I love Knuffle Bunny.
How cool is that?
Not a kerfuffle, but it's a Knuffle Bunny.
We have Goldman coming up next week, so that's another one that our Bloomberg listeners are